Okay, so welcome all of you for another live stream. Let me first check if the live stream is up and running. Yep, it looks fine. That's amazing. Okay, it's always amazing to be on a live stream with you all and to share our institutional trading analysis perspectives, knowing that it helps you a lot. So let me straight away jump into the charts. Okay, so let's bring this down and let's start with the higher time frame analysis. Okay, looks amazing. Okay, everything is fine, everything is up and running. Let me check it one more time. For the safer side, let's confirm. Okay, let's confirm it. Okay, so let's check it out. Let's click on it. Yep, I hear everything live. Amazing, right? Amazing. Okay, so this is going to be another live market analysis on the New York session to show you the trades we have taken live, and also to give you a live analysis of how as institution level traders we take trades. Knowing this helps you a lot. Okay, so now to start with, starting with the higher time frame. Now this is the volume profile chart of the weekly volume profile in the left and the daily volume profile in the right, and this is the micro mini Nasdaq index futures chart. So looking at the weekly volume profile, you can see in this area the price push down. These are weekly candles, push down, and then the price retraced up, and you can see in the last 2 weeks the price is within a range, these candles, and then you can see this is the current week over here. Excuse me guys, the current week. And so looking at the weekly chart, one possible direction of the trade is this volume point of control, this weekly volume point of control over here, because you can see during this week the price came down as a magnet towards this volume point of control over here, right, which is over here. So the price reached it. So then the next possible target is this volume point of control over here, because the current price action in the weekly chart is overall price action is bearish. So why do we say overall price action is bearish? Is you can see the price pushed down, then retraced, and you can see in the retracement stopped, and then it printed this bearish candle, which means there's a possibility that this retracement is halted over. And this candle is almost like an inside candle when you compare to this. It went out a little bit, but what that means is this retracement, there's a chance of stopping. So that is what happened over here. In the current week, the price came down. So that is why the weekly direction based on the volume profile is bearish. Now, then when you move into the daily volume profile, these are the daily candles over here. So if I just zoom down, you can see this is the daily chart. Again, if I zoom this down, this is the weekly chart. However, we are looking at the recent price action, right? That is what matters over here, right? So again, we are looking at the recent price action in the daily chart. That's what matters. So in the recent price action, you can see over here in this weekly, this area, you can see because it's bearish overall, you can see the daily volume profile is bearish in this area. Then so you can see the previous day the price tried to push down. However, it ended up in a bullish candle. But overall, then if you look at the last few days, you can see the daily candles, the price is choppy, meaning it's in a range. It slightly went below the range, but again it came back into the range. So you can see the daily candles are not giving a clear direction. Now the weekly chart gives an indication of bearish, buyers, bearishness. So this is once again, this is the live market analysis of the New York session. So this is going to help you a lot to improve your trading skills, and we are showing how as institution level traders we are looking at the market, and we will show you how to take winning trades in this most recent New York session as well, right? Okay everyone, so now then to summarize, the weekly chart, micro mini Nasdaq index futures shows a bearish direction. However, the daily chart, this is the daily chart, it is choppy, meaning it's showing a range. So now we enter into the market, live market, with the understanding that the daily price action is range, right? It's range bound. So then as institution level traders, when we see a range bound market, then our approach, I will explain to you how we should approach the market. So then with that understanding, then we jump into the 30 minutes chart. So then you can clearly see in the 30 minutes chart of micro mini Nasdaq index futures, you can see that the price is in a range. Okay, let me check if the live stream is uninterrupted. Let me double check. Okay, yeah, all good. Yeah, live stream is up and running. Okay everyone, so now then in the day 30 minutes chart, you can see the price is in a range, and when you draw the volume profile for this range from here to here, you can figure out the value area high, which is the value area is this ash color area. You can see the value area high over here. So we can slightly move this up if you want to be more precise, slightly, but it's to get the overall idea. And then you can see the value area low is over here, right? Value area low in this area, so you can slightly bring it up here. Okay, and then you can see the volume point of control, right, which is this black color line over here, which has moved slightly up compared to the previous day, right? That is why I moved it up, right? Okay, so now with this understanding, we see in the most recent price range, so this is the live chart guys, the New York session. You can see the value area. Right now I will explain you guys how to properly take the trade decisions. Okay, so bear with me and it will be very clear to you as if how institution level traders use these tools. So what are the tools we are using? What you see here is the volume profile, but also institution level traders we use order flow. I will show you the order flow as well. And also we look at big trades, institutional big banks trades, and we will show you how smart money traders are positioning their positions as well, right? So we started, if you join the live stream late, just to recap, we started with the weekly analysis which is bearish, and the daily analysis is ranging, choppy. Right now with that understanding, we come into 30 minutes and we can see that range, and we draw the volume profile. Then we can see the value area high, this green line, then the value area low, this blue line, and the volume point of control, this all green lines, right? So why we draw, if you ask from me why we draw the value area is the value area high, volume point of control, value area low, the answer is that is the fair price. Because what you guys have to understand is when the price likes fair price, meaning balance. So when there's a range, there is a balance of the price, meaning big banks, institutions, large institutions, they are comfortable with the price. That is why the price is in this range. So remember, most of the time guys, 70% of the time the market is balanced, right? And then if it breaks the balance, so that is what some of you call as breakouts, right? So when it breaks the balance, that's where the price will look for the next balance area, right? So price always moves from being balanced, breakout, sometimes it's a false breakout, so it again comes back into the balance area. But if it's a real breakout, that means then it's going to be a range, then it's going to be a trend. At the moment it's a range, but if it's a real breakout, it's going to be a trend. Then if it's a trend, what happens is the price will look for the next balance area, right? So at the moment, you can see the price is balanced. But then you can see at 9:30 a.m. New York time, this is that candle over here. So if I expand it a little bit over here, 9:30 a.m. New York time, we told our trader Oxygen mentor, we got our in-house traders which are working on prop firms and our in-house prop funds. So we clearly instructed them that at 9:30 a.m. New York time, to our panel of traders, we alerted about this strong price push up away from the range. Now when you see this strong price push up, it's bullish, right? Now then again, to come back with the overall higher time frame analysis, weekly is bearish, then daily is in a range, choppy. So our overall higher time frame bias is bearish. However, in the live market, we see when New York, this is the most recent price action guys, live, New York market, we notice the price push up, that means bullish. So overall higher time frame direction is bearish. However, the price pushed breaking up, giving a bullish signal in the 30 minutes chart. So as traders, what is important for us to do is, to be reactive, right? So as traders, if you try to predict the price, it's not going to work in your way, because you can predict and say the price is bearish. However, the price can do whatever price want. Even though you predict it to be bearish, the price can be bullish in the live market. So as traders, it's important not to predict but to react. You start with a prediction. However, you have to adjust your prediction based on the data given in the live market. So the prediction is okay, higher time frame bearish, but clearly daily is in a range. So daily doesn't give us, most recent price action doesn't say whether it's bullish or bearish, in the range, because it's a range. So when we see the live market 30 minutes, when you see the price push up, then you have to react. When I say you have to react, what I mean is, okay, even though the higher time frame is bearish, now you can see the 30 minutes is bullish. So the question is, are we going to take a bearish trade, meaning a short entry, or based on the higher time frame, or are we going to take a bullish trade based on the lower time frame? Answer is this. Just assume guys, if at 9:30 New York live market, instead of breaking it up, just assume hypothetically if it broke down, just hypothetically assume if the price came down from here, that means 30 minutes is in line with the weekly. In that case, if we enter into a trade, we enter in large positions because the lower time frame 30 minutes is in line with higher time frame. So if it happen to break down and give a bearish signal, when we enter into the trade, we put full power and we add more contracts, right? and we scale it more and more. However, when we see the higher time frame is bearish and the lower time frame is bullish, we still can take trades. However, we are not sizing it a lot. We are not scaling it a lot because overall it's counter trend compared to the higher time frame weekly volume profile. But still you can take bullish trades. I will show you a bullish trade which we took a little while ago in the live market. I'm going to show it to you with this analysis. However, if we take a bullish trade, we are not holding the trade for long. We will hold it for a short while and we will quickly in and out. Okay. And also because it's in the daily, it's not giving a clear direction. It's a range bound market. However, if it breaks up or down in the daily, it can give us a winning trade, right? Which is what I'm going to show you. So now when you see this bullish push up, right? Also that bullish push in the live market, it with heavy volume, you can see, plus it's with bullish cumulative volume delta. Also you can see it's with a green delta over here. So that means this displacement up is backed with volume, cumulative volume delta and positive delta. What that means is even temporarily it's a strong price push up. Now that is why you can see, guys, it was not a false breakout, because if this is the range, if this was not strong, the price could have immediately come back into the range. But as you can see in the New York session, the price push up, but it did not come back into the range because of it's a strong push up. Now with that understanding, in the live market, what we did next was we look at the 30 minutes price action as bullish. Hope it's clear to you, and I hope this is very insightful for you guys. If so, please let us know. So we will also open a live Discord for you all very soon for the public YouTube community, and also we'll give you access to our private trading room very soon. But let us know if these sessions are helpful for you, so that our management can make the decision to open up live Discords and live sessions for you guys, right? To be part of, and it's going to be free, right? We are going to provide it as a service for you all to uplift your education. But let us know if these sessions are helpful for you all for that. Now again, coming back into this, you can see, so the 30 minutes, we look at 30 minutes from a bullish viewpoint. With a bullish, short-term bullish viewpoint. Why short-term? Because of higher time frame is bearish weekly. So short-term, excuse me guys, short-term, it's bullish. So with that understanding, then we jump into the 5-minute chart. So we jumped into the 5-minute chart, right, in the live New York session. And what you see, these bubbles are big trades, these big trades are made by big money, right? Smart money, banks, large institutes, hedge funds, right? Big money. So we can see when we come into the 5-minute chart, they are heavily involved in this breakout up, right? The bullish displacement up in the 30 minutes is what you see here in the 5-minute chart. So this is micro Nasdaq Index Futures. I'm using this for the live analysis. However, if you understand these concepts, you can apply this into Forex, crypto, right? Because at the end of the day, guys, it's price action, right? Backed with institutional trading concepts such as volume profile, order flow, and big trades, and volume and cumulative volume delta. So all this applies for Forex market, crypto market, and even if you are from a country, in your local country stock exchange, right? It could be any of your local stock. However, you have to use the right tool which gives this data for you, such as volume profile, order flow, likewise. So if you are listening to us and following us, you can trade any instrument of your choice with this knowledge, including Forex. So now again coming back, what I'm analyzing is micro mini Nasdaq index futures live chart. Okay, so you can see in the 5 minutes chart the price pushed up and you can see it's with green bubbles. So now it confirms us in the 5 minutes chart the short term direction is bullish, but it's short term, right? So if we enter into a trade, we'll quickly in and out. So when we see it break the price, okay, away, these are these green lines. So it broke from, you can see the label here, from the value area high in the 30 minutes. So what that means is, see this line over here, I move my mouse, value area high, it broke up, right? So that's what you see in the 5 minutes chart. Excuse me guys, right? So this label, so it break away from the value area. What that means is, from balance, now the price is in imbalance because it went out of the balance. So if, and it push out from the balance range heavily with big trades. So short term, there's a possibility for you guys to take a buy entry, right? That's what we did in the live market, right? So we notice the price push up, then that's exactly at 9:30 a.m. New York Stock Exchange time. Then we give normally around 15 minutes time buffer to see what the price wants to do, because this push up could be a false breakout and the price could come down after 5 minutes into the range. So we give till 9:45 15 minutes to see what the price wants to do. So we can see in that time from 9:30 into 9:45, these three candles over here, you can see the price kept moving up. So now after 9:45 New York time, we understand the short term bias is bullish, short term, right? So there's a possibility of taking a bullish trade entry. So now the question is, where are we going to enter into the trade? So we enter into the trade in the live market. I will show you that position, but the question is how to decide that, right? Okay, so again 5 minutes chart, this push up is back with volume, cumulative volume delta and green delta, okay, and big trades, all good. And these green bars are bullish stacked imbalances, right? So that means a bullish, it's an extra confluence for the price to be bullish, right? And then we need to wait for a retracement for us to enter into a trade, right? So in this live market, if you are to enter into a trade, we don't jump into a trade, we have to wait for a better price. That is what smart money traders call as premium and discount. However, in future live trade sessions, I will explain you there's a misconception of premium and discount, which I will teach you, because that I will keep it as another session. However, if based on your understanding, now when the price push up, it's in a premium. But if you want to buy, we have to wait for a discount. Discount means retracement, right? So we need to wait for a retracement, right? So you can see over here around 10:30, see the price came all the way down, retracement, and the price pushed with red bubbles. What that means is aggressive sellers. So these green bubbles are aggressive buyers. If you have heard these terms, aggressive buyers and sellers, with real market orders, real orders. So these green bubbles, excuse me guys, are not pending orders. They are real executed market orders, real executions, right? So you can see aggressive buyers push the price up, then aggressive selling happened. However, you can see the aggressive selling was not rewarded, meaning aggressive buying, if you look at the length of the leg is large, and aggressive selling, the retracement leg is short, which means aggressive selling was not rewarded. And you can see especially these large big bubbles over here, which means we notice in the live market the buyers are very powerful. That is why you can see when the price retrace in the live market at 10:30, we noticed this, and we gave this to our private Discord and the live trading community, which will open it to you guys, to the YouTube community very soon. As I said, bear with us for that, but use this knowledge to improve your trading, right? when we explain this to you, you can use this in your trading, right? When you take future trades, that's the objective here. So you can see it when it retraces, you can see the retracement stopped in this heavy buying area right over here. So if you consider that as a retracement, then you can see the price retraced over here at 10:30, right? And then with that understanding, now we are looking for a possible bullish trade entry, possible bullish setup. So what we did next was, when we noticed 5 minutes also bullish, we jump into the 1 minute chart. So I will now go into the 1 minute chart of micro mini Nasdaq index futures. So this is that exact area in the 1 minute chart over here. This area where I move my mouse, you can see the value area high broken, and you can see when I move my mouse over here, it's 9:38. So we wait from 9:30 to 9:45. So this is 9:38, this retracement. So we don't take the trade over here, and it's not a complete retracement as well. So over here where I move my mouse is 9:45. So you can see 9:45 after 15 minutes of the market open, you can see the price in the 1 minute chart. So this is a 1 minute chart. So guys, again I'm telling you, this 1 minute chart is micro mini Nasdaq index futures 1 minute chart. But if you are a crypto trader, this can be your crypto 1 minute chart. If you are a forex trader, this can be your forex 1 minute chart. I hope you get the point here, right? So now you can see at 9:45 the price pushed up. So it did not give us a chance to enter into a trade at 9:45. Okay, so and also the price is positive with positive cumulative volume delta, positive high volume, and green delta. So now we are waiting for a retracement. In smart money concept, we are waiting for a discount because price is currently at a premium level. So you can see at 9:50, this is 9:50, it did not give us a retracement. So we are waiting for a retracement. You can see the price pushed up at 10, still the price pushed up. Now you can see at live market at around 10:30 New York time, the most recent price action, 10:30 New York time, you can see for this price swing leg up, retracement, swing leg up, retracement, swing leg up, and all the way retrace. So if you look at this whole area as the price push up, you can see the price retrace into a discount area from this swing low. So from this swing low, the price pushed up, right? Pushed up and retraced. So now for this price push up from here to here, where I move my mouse from here to here, we can see a retracement. So this is a possible area where we can consider into entering into a buy trade, right? So I have put the long position, but we did not take this trade over here. I will explain it to you why. This was in the live market where we placed this. However, we did not, to make it clear, we did not take this trade. We took another trade after this. I will show you. But I will show you why we did not take this trade. So focus on what I'm telling you guys, right? Now, when it retraced over here, we can see it printed a small red bubble, meaning aggressive sellers try to push the price down, but they failed. And you can see some green bubbles printed, which means aggressive buyers push the price up, which is a positive sign for us because we are waiting to enter into a buy trade. So when this price push up with aggressive green bubble, that is where we are interested of getting into a buy trade. That is why you can see this buy tool, we have put the buy entry here, but we did not take this trade. I will tell you why. Now we don't straight away enter into a buy trade after seeing the green bubble, because we need to see what the price is doing. So what we did at that time was we analyzed. Now this is so far what we saw up to now is volume profile and candlesticks and big trades, but now I will show you the order flow analysis part, with the footprint charts, right? I will go into the order flow and footprint now. So to decide whether to enter in the live market, this just happened in the live market, right? A little while ago. So we now jump into the footprint chart. So to jump into the footprint chart, right? So what you do is, let me just show it to you. So you just, okay, so to jump into the footprint chart, you zoom the chart, right? When you zoom the chart, now what you are seeing is the order flow and the footprint chart, which gives more information, right? So when I zoom the chart, what I now see is not the standard candlestick chart. I can see the candles, but I can see the footprint as well and the volume profile for each candle. So when I move this, right? So again, I will zoom down so to make it clear to you guys. So now the idea is we are thinking of entering into a buy trade over here, buy entry, but we have to find a precise location for the buy entry. To find the precise location to the buy entry, what we did in the live market was we zoom the chart into the footprint chart, which is, this is that green candle. Let me again zoom down to show you. You see guys, this blue candle over here, this one, keep an eye on this blue candle when I zoom, okay, this one. That candle over here, see I'm zooming that candle, this is that candle guys. I show you again this one, see now this one, this is that candle over here, okay. So this, can you see that blue candle over here, this one, right? Okay guys, if you see that, would you mind just letting me know in the chat window, right? So that let me know in the chat window if you see this blue candle right over here, so I can confirm you guys are, you know, clearly following it, right? So if you can type yes, then I know you see this blue candle, right? Okay, in the live chat. So now this blue candle where the price pushed up, right? So that blue candle, when I zoom, I can see during that small retracement, again I will quickly zoom down to show you the exact point. So you see the price retraced, pushed up. See, oh, retrace, pushed up. So retrace, pushed up. So again, if I zoom that area, this is that area. See, retraced in that part, pushed up, right? So you can see the bearish candles stopped printed and bullish candles started printing. Okay, the bullish candle started printing. Then you can see when we see this bullish candle, that is where we are interested of getting into a buy entry, right? So if you see this blue candle, just let me know with a yes message in chat window, please. So when we see this bullish candle printed, that's where we are interested. This is the 1 minute chart of entering into the trade. So where we enter into the trade is, okay, before that, let me check if the live stream is, continuing. Yep, all good. Yeah, wonderful, amazing. So you can see, so this is the footprint chart. You can see in this, that green, this blue candle, I can see this is where the big trade is printed, and I can see in this area where the volume is accumulated, right? In over here, the volume accumulation, right? Over here. Then if I, for that individual candle, if I draw my, let me get the volume analysis. If I get the market profile, volume profile tool, and if I draw it for this candle, right, only for this candle from here to here, right, just to give you an idea, you can see heavy volume nodes are over here, and for that candle you can see this is the value area low, value area high, and volume point of control, right? So this is the value area for that candle, individual candle, right? Okay. So I get a question from Ron asking, can the big trades be put on the footprint for easier reads for absorption in key levels? Yes, Ron, you can see the big trades are here already, right? See, now this is the footprint chart. You can see Ron, these bubbles are the big trades, right? So to answer your question, yes, you can put the big trades on the footprint, as this is what I see. You see one big trade here, see big trades, see these bubbles are the big trades, and then you're asking for absorption in key levels. Now when it comes to absorption in key levels, big trades can help you to understand absorption, but more I believe you know this, but mainly we look into absorption not using the big trades. We look into absorption using the delta values, which I will show you in a little while, right? Which I will show you the absorption. Now I will give an example. Now over here you can see in this price push down, you can see the price push down, and you can see red delta printed. That is absorption. So here when red delta got printed, Ron, look here. Over here you see aggressive sellers push the price down. Look here, Ron, right? So when aggressive sellers push the price down, they failed. That is why the wick generated and the candle end up in a bullish candle. So Ron, this is absorption over here, but you are correct. You see the big trades here, the red bubble. So that means this red bubble, you are correct, because the red bubble is aggressive sellers over here. So they failed to push the price down. And you can see Ron, you can see a red delta volume in the volume profile, red delta printed. So all that tells that absorption happened here, and what that tells is there is a wall of passive buyers sitting here. That means there's a wall of buy limit orders in this area. So that wall of buy limit orders, Ron, is causing the absorption to happen. So to summarize, if I read your comment again, your comment is, can the big trades be put on the footprint? Answer is yes. See big trades, the green bubbles and red bubbles. Then you are asking for easier read for absorption. Yes, this is absorption. But keep in mind, when it comes to absorption, you can not only use big trades, mainly you use the delta. You see red delta, which means aggressive sellers, but red delta was not rewarded, right? Because of the wick and the price pushing up. So with that, we understand that the aggressive sellers failed, and I will show, and the big trades will support. If big trades are printed, yes, it can support you to understand, okay, this is absorption happening. Is that clear, Ron? If clear, just let me know with a yes message. Then I will show you also, if I zoom this chart further, this area, right? If I zoom it further, you can see, right? You can see in this area, this whole area, if I zoom it, you can see aggressive selling happening. See Ron, aggressive selling printed in the footprint chart, but you can see the aggressive selling, this, look at the left hand side numbers, right? Aggressive selling happen, aggressive selling happen, aggressive selling happen, aggressive selling happen, because these left hand values are higher than the right hand value. So this is aggressive selling, left hand side. Right hand side is aggressive buying. You can see aggressive selling, aggressive sellers push the price down. Look at the, see 44.30, that means there's more sellers. 70.37 over here, that means more sellers than buyers. 55.19, that means there's more sellers than buyers. 59.27, see, right? So more sellers than buyers. So even though there were more sellers, right, see the sellers failed. Why? Because the price did not push down. So this is what happened was, even aggressive sellers pushed the price down. The price was absorbed by passive buyers, by buy limit orders. Hope this is clear to you. right? So that part. So with that, we understand absorption happen here. Then if I again come back to what I said, I just draw the footprint, so the volume profile for this individual candle. When I draw the volume profile for this individual candle, you can see, I will show it to you again because I was talking. So if I delete it, this is that individual candle. And again, for the bigger picture, guys, if you are confused, if anyone else is confused, this is the candlestick chart. This is the retracement. And now what we are looking is there any possibility of entering into a buy trade over here? So to figure out the precise buy entry location, that is what I'm doing now. I'm zooming the chart so that I can see the footprint chart. And that's what Ron was asking a question. I answered that question. And then you can see, when I zoom it like this, you can see absorption, as Ron said. So the sellers failed, and then I can see this blue candle printed in the live market, and I can see in this blue candle, its majority is green delta. What that tells me is its buyers are now trying to gain control, and absorption over here supports my idea at this very moment that buyers are trying to gain control because aggressive sellers failed, right? Even aggressive big trade red bubble failed, right? And the green bubble are starting to print, and the delta is green. And you can, with that I understand, as institution level traders, we understand, okay, now the buyers are trying to gain control in this 1 minute candle. Guys, again, this is the 1 minute candle, okay? And then to get further insights from the 1 minute candle, you can draw the volume profile for this 1 minute candle, right? You can draw it, and then you can see for that 1 minute candle, the value area low, volume point of control, and value area high. So this is that area. And you can see, if I zoom it a little more in that 1 minute candle, you can see this is a 1 minute candle, guys. You can see the heavy volume in this area. So if I am to enter into a buy entry, I will place my buy limit order now, because now the price has pushed up. So I have to now wait for the price to retrace back in the next candle, okay? In another candle, in one of the future candles. So in the next 1 or 2, 3 candles, the price can possibly again come down. So if the price come down, so again, look, guys, for an individual 1 minute candle also, you can apply the smart money concept of premium and discount. So the price moved up, which means price is at a premium. But to buy, we need the price to come into a discount. So if I draw the volume profile for a individual candle, I can see in the discount area, there's heavy volume over here, and I can see a low volume node over here. So if the price push up, I'm waiting for a retracement for this low volume node over here, which is just above this high volume node. So this low volume node is what smart money call as fair value gaps, right? But as institution level order flow traders, we don't call it as fair value gaps. We call it as low volume nodes, which act as a magnet for the price, right? And also the value area is where I'm targeting the low of value area low above this, because this is where the green bubble was printed. So if I want to get a reasonable risk to reward, this is the area where I will wait. These are 1 minute candles. I will wait for the I will wait for a 1 minute candle to retrace back to this green area. Now that is why you can see I put this buy entry over here, right? Over here in this area, right? But now then I will show you another thing. You can also see more insights, right? So if I put delta, I just changed the templates. I can figure out, looking at the blue, and so the blue is positive delta, black is negative delta. I just changed the delta colors. I can see the largest blue delta is in this area, in this candle over here, right? In this bar over here, right? So again, I'm letting you know, don't worry if you can't understand everything what I'm telling, because if you be with us, you will come to this level step by step, and we will release more individual 15-minute short videos explaining these concepts also in the future, but just see how we analyze the market for you to feel how as institution level traders how to make decisions. That's the whole idea of these live streams. Okay, and you can ask questions and clarify your doubts. Feel free to ask any question in these live streams. So what I'm showing you is, guys, now I can see this is the area in this 1 minute candle where the heavy aggressive buyers are in control, and this is where the aggressive buying is happening, this over here. So that is why I decided to place a buy limit order just in this area, in this 1 minute candle over here, expecting the price to retrace into this area. I hope it's clear, guys. If it's clear, just let me know with a yes message in chat window so that I understand, you are in line with what I'm telling. Just let me know with a yes message. Now then, after we understand that, so now I'm again coming down back to the normal candlestick chart. I'm zooming down, right? So I zoom down to the candlestick chart. Okay, and this is that green line I put, and this is where the buy limit order was placed. Now the question is, once you place the buy limit order, you can see in the next second candle, 2 candles after that, the price came and hit the entry, right? So if you are to place a buy limit order, you see this is that blue candle, then the next candle and candle after that came back, retraced and triggered the entry. Now, as I said earlier, we did not trigger this we did not take this entry. Why? Trading is a game of probability, so we need probability in our side, right? Now, why we did not, even though we were doing this deep analysis, why we did not take this trade is excuse me, guys. Sorry about that. Why we did not take this trade is, look at the cumulative volume delta. In this area, see the cumulative volume delta is bearish. So the cumulative volume delta is not showing us a kind of a bullish sign, right? So because of that, there's a risk of, even though the price hit the entry and went up, that's true. Yes, it hit and went up, and if you have to take a trade, you would have taken a 1 to 1.5 trade, for example, right? At least a minimum, right? Yeah, it would have been a winning trade of 1 to 1.5. However, this could not have happened, but because of bearish cumulative volume delta, there was a possibility where the price after printing this candle, there was a possibility the price to retrace further down into further deep discount levels. So because of that, the cumulative volume delta is negative. We did not like taking this trade, even though if we took it, it's a winning trade, but we did not like it. Not only that, then we also analyzed the options flow market at this exact time. I will show you the options flow market also did not give us a clear support confluence for taking this bullish entry. But if you are ready to look at the options flow market with me, just type with number 1 in the chat window, so I know you would love to see the options flow market. Just let me know with a yes message or with a number 1 in the chat window, please. Okay. Now at this exact time, we jumped into the options flow market, right, in order to see whether there's any positive indication of us seeing. So this is the time, this is the live market, just 10:30 a.m. when we were taking this decision, taking this trade, right? You can see now 10:30 a.m. when we look at the options flow market, right? You can see if I start the options flow, first of all, if I apply the net OI, I can see 99 percentile strikes over here. That's number 1. I can see, because these and also these are 0 DTE contracts. So because if I remove it, if I put it back the 0 DTE, you can see this 99 percentile strike level is over here. Now the price at 10:30 a.m. New York time is over here. So you can see 99 percentile strike level over here. Plus you can see, if I look at the gamma at that time, you can see this area is blue, slightly pink and blue, and you can see slightly reddish as well. So it's not very clear, exactly not clear, but you can see slightly bluish and slightly reddish, right? However, if you look at the stability index, you can see stability index is 11%, which means it's low stability, which means high volatility. So that means the low stability means there's a chance of price being volatile, right? Meaning price move. There's a chance of price move. And also you can see slightly in this area is slightly reddish. This area slightly reddish, red, which means negative gamma, which means again a chance of volatile price. And also you can see 99 percentile strike level at the top. So what that tells us is slightly stability index is less, slightly reddish, volatile, price can move, and this 99 percentile strike can act as a magnet. So we see a short-term 0 DTE support, meaning 0 DTE support for us to take a bullish entry, meaning support means this act as a magnet for the price. So you can see the options flow is giving us support to our bullish trade idea. Then that's the gamma level to see the price movement. But then if you look at the delta pressure at that time, you can see at 10:30 New York time, the delta pressure in that area is slightly blue. What that means is, blue means slightly bullish, because it's not sharp blue, right? It's not very sharp blue, so still it's blue, which means when we see in the delta pressure, when we see bluish, we think of taking bullish entry, right? And also the 99 percentile strike level over here. So this is at 10:30. But again, I'm telling you why. The question is why we did not take this trade, right? So at that time, this is the trace chart, but if you look at the hero indicator at that same time, right, you can see at 10:30, you can see over here, where I'm gonna move my mouse, at 10:30, you can see the hero chart, the purple color chart, purple color line, 10:30 is coming down. So it's coming downwards at 10:30, and if you look at the right hand side scale, it's 521 million positive. It's a 521 million positive value, right? So this purple line is the dealer hedging. If you have seen some of our previous videos, you will notice this, the dealer hedging. So the dealer hedging is, it is positive value, but it's coming down. So from 1.3 billion at 10 o'clock, it came down by 10:30 into half of it, 500 million, which means for this half an hour, the dealer hedging has been bearish from here to here. So if the dealer hedging is bearish, there is a possibility where the dealer hedging could go further down in the bearish direction, which is what happened after 10:30, right? You can see 10:30, the dealer hedging continue going down further into negative, further negative levels. So because of that is why when we see the dealer hedging is coming down towards a negative direction, there is a chance where the price could further go down. So that is why we did not take this trade over here. So guys, if that part was clear to you, please type with a number 1 or with a yes in the chat window, so I know you are in line with what I'm talking. So that is why we did not take this trade. Okay, and then since we did not take the trade, we were looking at the market, we were continuously looking at the market. You can see if we took the trade, it's a winning trade, right? However, and again, Maxim Bake and Ron, don't worry if you can't understand these concepts, right? So just look what I'm telling, just try to understand what I'm telling, and then in time to come you can apply these things in the live market. Okay, so just take this as a very insightful educational session for you guys to understand, like, so this could help you to improve your winning rates. Okay, this could help you to reduce your losses. Of course it's a winning trade, as you can see, but I explain you why we did not take that trade, because Maxim Bake, Ron, even though it's a winning trade now, it could have been a losing trade because of negative cumulative volume delta, and because of, see over here, right, negative cumulative volume delta, this area, right, in this, of course it printed blue positive, but majority of the cumulative volume delta is negative, and in this area it printed 1 or 2 bullish cumulative volume delta, but majority is bearish. So it's not, so the probability is less for us, right, for a buy entry. Okay, that's what I'm telling here to you guys, and probability is less for us for a buy entry. You see guys, probability is less, right? So again I'm telling you, Maxim Bake, Ron, trading is a game of probability, right? So if you can be patient, you can increase your positive portfolio, you can increase your winning months, and right, so that's what I'm showing you here, right? What happens in many cases is traders jump into trades without extra confluences. Now then we kept analyzing the live market. You can see that at 11 o'clock I will show you something very interesting now. Bear with me. At 11 o'clock you can see the price again printed a red bubble, meaning aggressive sellers try to push the price down, right, over here, and then you see it printed some bullish candles. Now if you look over here, still you can see the cumulative volume delta is bearish. However, you can see aggressive sellers failed over here, and the price started printing blue bullish candles, right? So now I'm going to show you something very interesting which will really help you a lot. If you guys are ready for that, would you mind typing another 1 in the chat window or yes? So I know you are getting something valuable from here. Okay, if you don't mind, type 1 or yes in the chat window, because I'm going to show you something very interesting and which will help you a lot. Okay. Right. Okay, so let me draw a line in the chat window. Hold on, so I can see, just put a line so that, okay, yep. Okay guys, I'm sorry to ask again, would you mind typing another 1, because I just need to make sure you guys hear me loud and clear in the chat. I just draw a line in the chat window. If you can put another 1 below the line I draw in the chat window. Amazing guys, amazing. Oh, amazing Maxim Bake, thank you for that, right? And now, so I'm going to show you something very interesting. Now over here, now we are really looking for a bullish entry. Ron, why? Thank you for the confirmation, Ron, in the chat window. So why are we looking for a bullish entry? Look at the left hand side. We got aggressive buyers pushing the price up, right? And we see a nice retracement, right? We really love to take a trade, right? So we are looking for a buy entry, right? Now we see another retracement over here, this area, and aggressive sellers failing, and we can see blue candles printed. So if we don't use footprint charts, if you don't use volume profile, if we don't use big trades, we will just enter into a trade here, right? We will put a buy entry here, we'll just put it, and we'll say okay, we will say, right, okay, this is the area, we can see a blue candle. I'm just giving example, right? We'll say okay, we'll just put the, let's say the stop loss, and we will say okay, we are targeting below this swing high, right? And we will say okay, it's a 1 to 2 trade, and we may put a buy stop order over here, right? But what I'm telling is that's not what we did. Okay, what we did was something very special, right? I will show it to you now. So what we did was not that. We see aggressive sellers failing, right? And we see aggressive sellers failing, but we don't see green bubbles here, right? Meaning the aggressive buyers we don't see. But what we did was, Maxim Beck, Ron, what we did was, we at that very moment, what's the time? 10:30, now it's 11 o'clock New York time. What we did was, we jump into this is the micro mini Nasdaq index futures chart. We jump into the S&P 500 chart, right? Okay, so we notice at that same time, Maxim Beck, Ron, we notice that over here in the S&P 500 1 minute chart, 11 o'clock, we see more green bubbles, right? And we see a red bubble, aggressive, and we see this red color bar, which is known as bearish stacked imbalance. So we can see this bearish stacked imbalance means, okay, aggressive sellers try to push the price down here, but you can see they fail, the price pushed up. So aggressive sellers are failing here in the S&P 500 chart. Aggressive buyers have starting to appear here where I move my mouse. Aggressive seller is not printing big bubbles. So now in the S&P 500 chart, I can see Maxim Beck, Ron, I can see more bullish confluence compared to if I go back to the in micro mini Nasdaq index futures chart. So this is the Nasdaq 1 minute chart, red bubble. At that same time, 11 a.m. S&P 500 chart, green bubble. So now Maxim Beck, Ron, we moved away from the Nasdaq into S&P 500, and now we monitored S&P 500 to see if there's a possible bullish trade entry. And you can see, Maxim Beck, Ron, you can see in the S&P 500 it started to print bullish cumulative volume delta, and you can see the cumulative volume delta is more bullish in the S&P 500 compared to the cumulative volume delta in the Nasdaq. Is that point clear to you guys? Would you mind typing another one in the chat window, please? So compared to Nasdaq cumulative volume delta, it's more bearish, but S&P 500 cumulative volume delta at that time is showing slightly more bullish signs. So because of that, cumulative volume delta bullish and more bullish candles and failed aggressive sellers failed here, right? And bullish bubbles being printed over here, right? And also you can see when the bullish bubbles printed, the positive delta printed, positive cumulative volume delta, and 11 o'clock we again look at the options flow chart, and you can see at 11 o'clock Maxim Beck, Ron, this is the options flow chart. Why are we looking at the options flow chart? If you look at our previous videos, you will have seen options flow can drive the stock market and the futures market. Why? Because when in the options flow market, when the market makers, the dealers, when they take the opposite sides of the entries, because they have to provide liquidity, so they will take the opposite side of, again, don't worry if you can't understand what I'm telling. It's good to hear these things even if you understand or not. So bear with me if you can't understand, but just listen what I'm telling. What I'm telling is, in the options market, dealers and market makers are taking the opposite side of your trades. When they take the opposite sides of their trades, they have to hedge their positions with alternative assets to reduce their risk. So for hedging purpose, they use futures market or stock market. So what this tells us is, when the purple color line at 10 o'clock to 10:30, purple color line was going down, which means dealers, market makers, dealers were bearish, meaning they were hedging in the bearish direction, meaning they were selling futures contracts, right? However, you can see at 11 o'clock, right? From 11 to 11:10, you can see this area, again, that purple color line started to come up, and around 11 to 11:15, you can see in the right hand side, it's 319 million bullish, 319 million positive value. So the dealer hedging from bearish now shifted to bullish, and this purple color line and the green line is the 0 DTE dealer hedging, and this is the full one with including 0 DTE as well, the purple, right, and future contracts, but this one is a 0 DTE. You can see both of them started going from down to up, which gives us a positive sign that the dealer hedging now moved from bearish to bullish. And at 11:30, if you look at the trace chart, these are extra confluences. These are just extra confluences, because without any of this you could take trades. Okay, you could take this trade and end up in a winning trade or losing trade. Again, this one we can take the trade, this one, without looking at the options flow market. But if you look at the options flow market, it gives you extra confluence, extra support, right? But if you don't have access to the options flow market, you can take the trade without options flow. But with this information, you can take the trade. You can. So what you do is, if you don't have the options flow market access, if you don't have access to the options flow, what you do here is you see these bullish candles and you see bullish cumulative volume delta, and you see bullish aggressive buyers. So what you do is you place your buy limit order here or buy stop order, and you put your stop loss below this swing low, and you target, your first target will be just below this swing high. Okay, but before that, if you have access to options flow market, you can just look at the options flow market and get some extra confluence. That's what I'm showing. So if you look at the options flow market at 11 o'clock, so if I look at gamma exposure to see which direction the price could whether the price is really moving or not moving, like volatile or not. So if I just move forward 10:40, 10:50, 11, so at 11 o'clock I can see in the trace chart, I can see the white color line is the price line of S&P 500, and the purple line is the hero, right? So hero is going down. However, the price is sitting over here. Then we can see the 99 percentile strike is over here, 0 DT. So we are still positive, right? And you can see still it's slightly reddish. Reddish means, and stability is less, which means volatile. The price could move, right? There's a chance of price moving. Then we jump into the delta pressure to see whether it's buy direction or sell direction, right? So if I look at the delta pressure, again, let me just draw a line in the chat window, guys, my mouse, because just to make sure everything is fine. So if you guys see the delta pressure chart, would you mind typing a 1 in the chat window so I know you see me? So in the delta pressure chart, I can see the price is in a bullish, like blue area, bluish. So see the white color line, okay, over here. The white line is the price line. The current price, S&P 500 price over here, SPX price. So 6819. You can see over here, it's slightly blue in that area. Slightly blue means bullish. Below that it's red, but current moment, where the price is, it's blue color, right? And also it's above key gamma strike level. Also the price is above the hedge wall, right? Over here, right? Slightly at that moment. And you can see 99 percentile strike over here. So this blue or purple means in the delta pressure chart, which means buy, it's a buy indication. Meaning it supports a buying pressure, right? Dealer hedging, right? So the buying pressure. So the dealer hedging is more towards buy direction, right? And 99 percentile strike can act as a magnet. Plus the hero chart is now going towards upward direction. So that is an extra confluence. So with that extra confluence, buy confluence, what we did was we jump into the 1 minute chart S&P 500, and we placed our buy limit order over here, and we put the stop loss below this swing low, and we target, the first target was not the complete 1 to 2. The first target was over here just below this for a 1 to almost 1 to 1.5 approximately in this below this swing low. But then we kept the trade running further, right? We kept the trade running further, and when we see the price is moving above this resistance level, price pushed up, aggressive sellers try to push the price down. However, see a lot of red bubbles but less price movement down, which means we can hold the trade. So we took the first partial take profits 1 to 1.5, but seeing aggressive sellers not rewarded in this area, we kept holding some part of the trade. Then we saw this retracement. So what we did was, when the price was retracing heavily, we moved the stop loss to break even over here, and we kept the remaining of the trade running. But when we see the price pushed up, breaking this resistance level over here, when we see the price pushed up, we started trailing the stop loss, right? And then we moved all the way up to here, approximately into 1 to 2. And then once we see this green bubble printed with aggressive stacked imbalances, see, buy side stacked imbalances, we kept trailing the stop loss, and finally we moved the trailing stop loss just below this green bubble. That's how you do trade management, if you understand, right? So we use trade management using these concepts. So we kept the trade running and we trailed the stop loss to this, because also the time was at that time, if you look over here, it's New York time 1 p.m. which is the lunch time. So we if you are the day trader, if you are a day trader, if you were in the charts for nearly 2-3 hours, it's a good time now for you to exit your trade, especially if you are trading prop firm accounts, right? If you are not holding your trades, right, you could exit at these points. So you just trail the stop loss just below this, and you can see when the price pushed down, it stopped us out. But by the time it stopped us out, we trailed the stop loss and we made a remarkable 1 to 2.5 winning trade. So looking at this whole concept, I will answer your question, Rondon, but looking at this whole concept, so this was a remarkable 1 to 2.5 winning trade using options flow, order flow, volume profile, and secret sniper big trader indicator used by world top class traders. So I hope this was a very insightful session to understand how to manage. Then there's a question from Rondon asking, do you still add the MNQ gamma levels on your chart to avoid misreading trade unless you share another screen? Yeah, actually we add the gamma levels. I will show you, right? So we add the gamma levels, Ron. So I will show you in my other charts. So over here. So also we look at into other aspects. We look into economic calendars. So if you guys see this over here, if you would mind typing 1 in the chat window, so I know you guys can see my screen again with the economic calendar as well, right? Okay, so yes, Maxim Beck, all good. So yeah, we have added the gamma levels. So we have gamma levels added. So over here you can see this is the gamma levels. We can see the call wall, we have the volatility triggers, right? So we have them, right? We look at the put walls, we look at the other gamma levels over here, right? So we keep an eye on this. So at that time when we were taking the trade, we saw the price was above these gamma levels, and also we were concerned because the price was reaching the call wall, so that's why we don't hold the trade. When we exit our first take profit, we exit large number of contracts, because the whole idea is it's compared to the weekly, it's a counter trend we took, because weekly expectation is bearish but daily expectation is slightly bullish because it went above the daily range. But because of that we are not holding the trade for a long. But to answer your question, Ron, yes, we add those gamma levels and we keep eye not only on S&P, we also look at them in SPX, and also we look at them in the S&P 500 as well. So when we take these trades, we look into these gamma levels to answer your question. So hope this was a very insightful session for you guys. And if you love this, please give a feedback, as a comment. If you are happy to, give a comment, so that it motivates us, to make more educational trading content for you guys, right? So and give us a thumbs up if you can, for these videos, so that it helps, to us to understand that you love these videos. So I hope this was a very insightful session. Maxim Beck, Ron, and thank you for being, and supporting, in the chat window. So with that, we are going to stop the session, and we will see you soon with another live session. And as I said, we'll soon open our private Discord to you guys for free of charge, plus live trading room as well. So you could, see how we analyze this in live market as well, right? Yes, for sure. That's for sure, Ron. We do live trade sessions, but we currently do it with our prop firm traders, our in-house traders, because we got our private equity funds, we got the private funds where we trade. So we keep those live trading sessions for our Trade Oxygen trading community, for those traders, but because we deal with client funds. But we will soon open, as I said, Ron, for the YouTube public community, we will open our live trading sessions, and we'll open a private Discord for free of charge, right? We look forward to doing that with you guys very soon. And let us know if you love these sessions, so that we could it could help our management to make that decision to open the live trading sessions live to you guys as well. Okay, so just give some feedback and comment, as I said, and thank you so much for being supportive throughout this. It's lovely to being with you all, and hope you guys learned some insightful sessions from this. And if you don't mind, would you mind typing where you are joining from, which country? If you're happy to say Maxim Beck, Ron, if you don't mind, if you are happy, so that if you're happy to share where you are from, so we know where you guys join, the country, like if you're happy to say only, okay, so that we know our audience. Okay, so Canada, that's nice to hear. Maxim Beck, US, Ron, that's wonderful, right? Amazing. And we'll see you soon with more educational content, and I hope this will help you guys to uplift your trading knowledge, and we'll give more insights, because to help you uplift your knowledge. So take care and have a wonderful time. Okay, so we'll see you soon with another video, right? I'll just conclude this, just for concluding purpose, for the recording purpose, let me say. So let me just bring it a little more, but thank you so much for being with us. So I'll stop the session, but let me just conclude this for official concluding purpose. So this was a remarkable 1 to 2.5 winning trade using options flow, order flow, volume profile, and secret sniper big trades indicator used by world top class traders. Hope this was a very insightful session, and see you all soon with another live session. Take care.